Thank you for tuning in to another edition of the Vulcan Report with yours truly, the Algo Capitalist. Today is Wednesday, October the 10th, 2018, a month ahead. All right, so it's been a minute. I've been in the lab hardcore for the past few weeks, working on some things, following these algos, trying to get a sense of what's real and what is not. And that's what I've been doing. So let's take a look at what the charts are telling us. Starting off here with bonds, ticker is TLT. As you can see, this market is currently in a bear market, hence the bear right here. Bottom right hand corner of the screen, you see Mr. Bear. Okay. And as you can see here on this daily chart, you were warned yesterday and the day before that the market was starting to bounce. You got rally alerts here. All right. So the bounce off of the lows was no surprise to you because you saw it coming. You were warned. Those of you that get the daily pulse wave price triggers, you already knew what was going on. See, bonds are still in a bear market, trading well below the Kumo cloud, downtrend channel in full effect, and negative trend momentum strengthening. All right, and the market's bouncing off those lows. How much farther we get to good? We'll probably get somewhere near the momentum line here, which is this blue line here. All right, so you probably got about another, maybe another $1.50 you can rally before the bears come back in and push prices back down again. But I expect bond prices to continue to be under pressure for some time as the rates continue to surge. It was noted and talked about for a long time that if the Fed raised interest rates, it wouldn't do anything to the market because the economy was so strong. Yet, plastered all over the TV screen today was talking about how, soaring interest rates are hurting the stock market. For years, they were saying, we can raise rates. We're going to raise rates. It's not a problem. And the market was like, yeah, I'm strong. It's not a problem. And now here they are raising rates. And the first thing they say when the market starts to correct is, oh no, these rates are hurting the market. Can't have it both ways. And you can see here the bond market prices continuing to be crushed into the sand. Next chart. All right, next chart is the Dow futures. All right, here we go. Today, what you probably are unaware of if you were just watching the financial channels, is that the futures today closed down over 1,000 points. That's right, over 1,000 points. It was not a flash crash. It was a steady downward trajectory. And again, this is a daily bar, not a weekly, not a monthly bar. So let's see here. You have erased quite a bit of gains, but we're going to look at the big picture. Here is your weekly chart of the same market, the Dow. When you look at the daily chart, it looks absolutely catastrophic. Oh no, it's so spiritual. But when you look at the weekly chart, you're saying, humbug, nothing happened. Correct. All you did was take away a couple of weeks worth of trade. Yeah, all you did was put us back to August the 17th, the week of August 17th of 2018. So all you did was take us 2 months back. So you just erased 2 months of gains. Okay. Market's been up for a long time now. And all you did was erase 2 months of gains on a correction. This is a healthy correction. You needed to correct and touch your trend lines, test the intermediate and the long term, which is the orange one. That's what you really needed to do. And so far, supports are holding up rather nicely. I anticipate a possible continuation tomorrow, but not too much downside, all right, if any at all. And then probably around noon tomorrow into Friday, take back Friday, markets will start their trek back upwards. Also, as earnings seasons come, and you know some companies are going to blow it out of the water, you can see new highs ending out the year with new highs. That's my projection right now. So this is going to be a wonderful buying opportunity. I do not believe the Fed is going to allow the market to stay down. Every time the market corrected before, if you go back here on your weekly, it shot right back up. Here you correct it, all right? All right. You started the month of February off with correction of this year, and then the market went sideways for a couple of months, for about a month. Then you came down here and tested that low, all right, because this is a pointer. Didn't take it out like you're normally supposed to. Just came down here and tested it a few times, built a base, tried to rally, fell back down, finally broke out, and then here we are right now. All right. So now the market's building a support base around just above the long-term trend line support, this orange line you see here. All right, so everything is looking at 24,898 is the trend line support. Okay, so barring any other unforeseen event, this is what you pretty much can expect for this to hold. Every time the market came down and tested it, it breached it, but not on a close. It just spiked on it, spike lows, and then you come back and you bounce. So I suspect wash, rinse, repeat. This is going to happen again, and then the market just takes back off. All right, so on the weekly chart, still bullish. Still bullish. No technical damage, just correction back down toward your trend line support. As long as prices don't close below this trend line support, every pullback or correction is going to be viewed as a buying opportunity. Uptrend channel is still intact for now. All right, still intact. Uptrend channel still intact for now. Of course, that too can change. All right. You don't want to see prices close below 25,322 on your Dow futures. And as long as that can hold, then you're good to go. I see the market getting back above 26,000 probably in a hurry. All right. So this is where we are right now. Nice, healthy correction, long overdue, as you can see. Really haven't had one since back here. The only caveat, the only iron I will throw in the fire is you're going to have people crying head and shoulders, double top. Here you topped out with a close of 26,604. Here we got 26,746. All right, and was not able to maintain that. See, not able to maintain that. All right, got crash alerts going back. Let's see, 2 weeks. 2 weeks ago, we got our first crash alert on the weekly chart. Remember, the system sometimes leads the market 3 to 5 days out. This is bar. Here's the alert. Didn't happen here. That's one. Happened on the second bar. Boom. There you go. And you have another crash alert for tomorrow's trading. You're looking at a possible continuation pattern. I don't see too much selling pressure, though. I see more so covering around that time. But, you know, you never know. Market may want to come down here and actually test the orange trend line support of 24,898. It may want to do that. So we'll see. All right, so that's another 600 points to the downside to go before you possibly see that bounce. You could even spike low before it. Here we did it. We did, let's see, 23,476. All right, so you could overshoot it a couple of hundred points, anywhere from 300 to 400 points on an overshoot. All right, and that'll put you at 24,000, maybe 5, something like that. All right, and then the market should start to recover at that point. That's where your support should be here in the Dow futures. And you take a look here, you had your crash alert there, rally alert here, crash alert here, rally alert here. See how the crash alerts correspond with each market movement? They always predict ahead of the market, always calling the tops in the markets, always calling the bottoms in the markets ahead of schedule. And then that's what happens. You wait for it, then the market comes to you. If we double top, then the secondary analysis kicks in, which means you got to close below the trend line support, the major support line. Then we turn all the way bearish and drop below the Kumo cloud, because then this will be viewed as a double top here on the weekly. Boom. Where's the floor? There won't be one. There is none. We don't know how accelerated things can get and how long it could last. We just don't know. So we trade what we see and not what we think. Follow the price action and you'll be all right. Now I know all the doom and gloomers and fear mongers are going to come out tomorrow and talk about, oh yeah, see, this is the crash, this is the collapse. Sell your house, sell your gold and your silver, and hide in your bunker because the bombs are about to fly. Nope, it's just a market correction. It's long overdue. Nothing to get all uptight about. It's not a bear market yet. Taking a look at silver. Gold and silver did absolutely nothing while the markets were unwinding today. Did nothing. Gold stayed at like 1190 all day long without moving. The gold futures refused to budge all day. Even when the markets were at their lows and hit new lows, gold didn't even move, not even a tick. Nothing. Last crash alert you got on silver on the daily chart was on October the 3rd. Nothing has changed. It's locked in on this negative momentum. And this is the beginning. So this red line coming down here, what do you got? An official return to a bear market in silver. Is it ready to turn yet? Nope. We haven't had rally alerts since the last rally alert we got was on September the 17th. All right, that was the last rally alert we got. And then before that, we got a notice rally alert on September the 12th. And then here's the market. You saw the market finally broke out. Got a crash alert here. Market fell down. It's just simple arithmetic. All right. Now, these white arrows are also, those are trend channel change alerts, okay? You got one back here. And then you got one here, which basically collaborated with these right here. They confirmed the rally alerts, this right here. But now, here we go. You just got another alert of a new trend channel, downtrend channel forming. And here we are, all right? So there's nothing bullish that I can talk to you about on the silver when we look at the daily chart. But if I switch it over to the weekly chart, it gets even worse. All right, you had your rally alert back here, the week of September the 21st. And we have two crash alerts. We had one here, and the markets are proceeding down. So unfortunately, coming into Wednesday's trading, we had a crash alert. All right. So we'll see if we don't get any follow through. I wouldn't be surprised to probably end up getting a rally alert tonight once the update is done. We'll see. But the downtrend channel is still in effect. Market looks like it's trying to build some buying interest. Some buying interest is coming in. Market's trying to make a bull run. You saw what happened last time. It failed back here the week of June the 8th of 2018. Got some buying interest, but it was overshadowed by all the selling pressure that entered the market. You had the bullish buying here. You had some large positioning here, but then on the next bar, the next week, everything went neutral. Tried to run, but the bulls couldn't hang on. Market fell down and closed lower. And then the next week confirmed you got a crash alert alerting you to much more downside potential. Then the next week you confirm the crash alert with the official downtrend channel, and boom, there you were. So the bulls could not hold it back here and lost it. And this was the result. Looks like the market's trying to put in another down leg, so we'll see what happens. But that's silver for you. All right, taking a look at the Russell futures. All right, this is the Russell 2000. On the daily chart, you can see this one on the daily is catastrophic because you're seeing a bear market. You see the bear in the corner here, roar. Okay, he goes roar, grizzly bear. All right, and you see this is nasty, just down. All right, we have no kind of rally alerts or buying alerts anywhere. All right, the last alert you got that a trend channel was forming was back on the week of September the 14th. All right, you got a bullish sign, but you got no follow through in the next week. Market failed to do it, so we're waiting to see if it would do it on a preceding bar. It didn't. Instead, you got the reversal, momentum reversal, saying that now the uptrend channel failed to materialize. Now you're getting the downtrend channel alert. Market stayed calm the next week. Looked like it was going to reverse again. Bulls couldn't hold it, and then the rest is all she wrote. On the daily chart, you have price destruction all over the place. You're below the Kumo cloud, trend lines below the Kumo cloud, price below the Kumo cloud, momentum accelerating. It's just looking nasty on the daily chart. Flip it over to the weekly chart, and what do you have? Technically, you have an argument that you have now put in a possible short-term bottom and base. Now, the week isn't over with yet. If this were to be Friday and you were to get this close below the long-term trend line like that, I would say that you have a high probability of a continuation with much more downside for the next following week. But the week's not over with yet, so we don't know if we're going to get that rally, possibly reversal intraday tomorrow and into Friday. We don't know that. But right now, the market's done is come down and test the long-term trend line support, just like it did back in here. It breached it good. You had a nice spike here on the week of February the 9th of 2018, a nice spike, all right, and made you think that you were really going to turn possibly, but you didn't. You had a nice air pocket between the trend line support and the top of the Kumo cloud also. The representation there was, let's see, representation looks like it was possibly, I want to say, almost, was that 200 points? No, 13. No, 100 points. Okay, a little over 100 points. About 120 points of air pocket here between the trend line support and the top of the Kumo cloud. All right. So you had that dead space there. So here on this one, it's a little bit narrower. You have only about, I want to say 50 points, give or take 40, 50 points of air pocket between the trend line support and the top of the Kumo cloud here. So I think we're going to spike down. We're going to spike in the pocket and then reverse back up, just like you did here. You spiked in the pocket, and then the market closed higher on the following week. So I see that same type of scenario possibly playing out. And it should be noted that it happened right here when you got that downtrend channel alert momentum change. The next bar was that breach. Here, same thing is happening. You got the downtrend channel momentum alert, and then on the next bar, it breaches the support. Downtrend channel alert back here, the week of February the 2nd, 2018, and then the following bar breaches it. And if you waited, then you would have been able to catch that nice bounce here. All right, you'll caught that bounce because you got your rally alert here, and then the market rallied, came down, and then really hit the moon. So this is where we are. All right, so I see the same scenario possibly playing out here, barring any other contingencies or unknowns. This is where you are. However, unlike unlike last time, now you are entering into a bear market phase as far as momentum is concerning. All right, here's your bear right here in the right here on the bottom right hand side. All right, but it's a little baby bear, not too big of a bear, and it's just starting on these bars here. Same thing happened back here, except for the bear happened after. It happened pretty much, it coincided with the secondary bar. Here, it's before you get that official alert. So this time is different. You know, it's, oh, this time's different. Yeah, this time is different. It is different. Now, unlike the Dow, there is no head and shoulders double top. All right, because back here, you had a close the week of January 26, 2018 of 1609 and a half. All right, but back up in here, your close is 1743.20. So this was an official breakout, and now you're coming back down. It should be noted though that here you are back closing inside the body of this bar back here. All right, I'm giving you the secondary scenario now. This is important to note because this is a pointer bar on the weekly chart. It is important, okay? Pointers are like gaps. They get tested. Markets come to and exceed those. This is pointing down into the Kumo cloud. Here's this bar now. It's closing within the real body of this bar, this pointer bar. This is what we're testing. The market can reverse. It can reverse within this body. Chances are, if prices drop outside of the body and into the pointer, it's going to drag prices much lower and possibly fall below this Kumo cloud. All right, so this is a very critical juncture for the B-side argument. We're at a critical juncture to prove whether an all-time top is going to be in, and now we're looking at a really huge secular bear market, which means that the bear market extreme low has to equal the bull market extreme high, which means we won't hit a low for at least 10 years. So we'll just grind and grind until we possibly, actually, no, I have to take that back. We grind until we do take out the 2009 lows. All right, because that's how the secular momentum cycles work. Not trend cycles, but the momentum cycles work. All right. I've talked about this years ago. You have situations like that. All things being equal, if this is a top, all right, we're just assuming, let's say this is the top, this is the all-time highs, this is it, all right? If that's the case, then remember, the bear market has to equal in strength, capacity, breadth, and duration as the bubble did. Are you getting that? So that means we know where the highs are now, if this is the highs, but we also know where the lows are. Where are the lows? The lows are the 2009 lows. Those are the lows. If this is the beginning of a bear market, the secular bear market, 2009 lows is the target. All right, that's going to be your initial target to take some profit off the table on the shorts. And then once those lows get violated on consecutive closes, then now you're entering into the final stages of the bear market, where it's going to seek support, find its lows, and then you reverse back into the channel from there. All right, everybody follow? That's where we are. All right, that's where we are. So this is your Russell on the weekly. All right, now let's look at the next chart. Here's your NASDAQ 100. All right, this is the daily chart. Let's pull up the weekly, because the daily can scare people when they look at that daily chart. All right, look at the momentum of the tech sector. See these blue bars? The blue bars represent unbroken bullish momentum. Where's the red bars? You've only got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 from August the 21st of 2015 until you just corrected now, October the 12th of 2018. 2 years and what's that? So 2 years and 2 months? 2 years and 60 days? You have not had negative momentum in the tech sector for 2 years. I'm sorry, I keep saying 2, it's 3, because that's the 2015 I said. 3 years, so 3 years and 2 months. It took 3 years and 2 months to get another bearish momentum reading in the tech sector. The market just went straight up on your weekly chart. Look at this. This is a weekly chart. These are weekly charts. Weekly chart, not daily charts, not tick charts. Weekly chart. Look at this, straight up. There has been no real correction for 3 years. 3 years. Is this going to really be a correction, or are we just going to do one of these numbers over here? Because that's not really a correction. Look at that. And all you're doing is coming down to the longer term trend line resistance and just finding some support. And just like wash, rinse, repeat before, you come down to the trend line, you get a rally alert, the market recovers. Rally alert, market recovers. Rally alert, market recovers. Rally alert, rally alert. All right? Got a downtrend channel reading before. You saw what happened then. You got one now too. Had one back here too. Market went bananas and broke out again. Had one here. Got your rally alerts. Bam. Market broke out. Back here, rally alert. Market broke out. Back here, rally alert. Market broke out. Back here, rally alert. Market broke out. Go back here. Rally alert. Market broke out. Rally alert. Market broke out. Rally alert. Rally alert. Rally alert. This goes on forever. Rally alert. Rally alert. Rally alert. I mean, what more can you say? Now, as of right now, there is no negative momentum reading on this because this week hasn't finished yet, but we'll see what happens. Coming into this week, we did get a downtrend channel alert here in the NASDAQ 100. Switch it back over to the daily. And here you go. All right, so this is what we're looking at. You got your crash alert back here on the daily chart. Confirmation of a downtrend channel here, October 4th. And here we are, October 10th. All right, that's how the price triggers work, folks. All right, so that's your NASDAQ 100. Taking a look here at gold on the daily chart. Remember, this market did nothing. It did nothing all day while the stock market was, shedding. It did nothing. Downtrend channel confirmation here, and then we have no follow through. You got your downtrend channel confirmation October the 8th, but here we are 2 days later, 2 more bars in, and we got nothing. It's not going up or down, it's just like flat. But it's under the banner of negative momentum, which seems to be picking up because the market's not able to rally any. And the overhead resistance is pretty dominant right now. And that, it's right below the Kumo cloud as well. So it's just flatlined. You've been flatlined in gold for quite some time. If I pull up the weekly chart here, all right, this weekly chart shows you've been going sideways for 2 months. Nothing's happening. We got that rally alert back here on August the 24th of 2018. This is weekly charts now. And the market has failed to materialize. All right, you're more than 5 bars in, 3 to 5 bars out. You're more than that. So now this alert is invalidated because nothing's happening here. Now we'll see where the market closes this week, and we may possibly get another rally alert. But right now, we got nothing. The market's flat. It's doing nothing. Nothing at all. All right. All right. Since 12/15/40. Nothing's happened. The market tried to get up here. Already hit 1220, went up about $5 and then fell back down here. Couldn't get back above the previous highs. Same thing here, and here you are. The market just can't rally. And it's way below the Kumo cloud. So gold is just dead to us right now. It's doing nothing. It's sleep. All right, taking a look at the E-mini S&P 500 on the daily chart. Same thing, downtrend channel right here was warned, and then the market now is dropping below the Kumo cloud on the daily chart. Pulling up the weekly. All right, on the weekly chart here, you can see market is pulling back to test the long-term trend line support. And just like before, you tested it, got your rally alerts, market rally. All right, rally alert, rally alert. All right, here you go. You got your trend channel, bullish trend channel alert. Boom. Market tried to look it's going to head fake you, and then boom, off to the races. So these alerts are there for a reason. Okay, back here when you topped out. All right, unlike the Dow, this does not look like a double top. And the reason being is because it did close higher than here. You closed at 28.74.5 back on the week of January 26, 2018. And here we are the week of September 21st, 2018, a close of 29.32.25. See, 28.74, 29.32. So you closed higher. You took that out. Can't hold it though. It just came right back down. So this is not as telling as the Dow, but still topping out. Can't rally. Can't hold. All things being equal, you got the trend line support here. which is setting at 27.33 and 3/4. All right. So that means that the market can fall another 40 or so points before testing this support. All right. And right now, this is just where we are. So we'll see what happens. There's a strong chance, though, and I have to say that I don't think the markets are going to be a quick slingshot V-shaped recovery, because you got the momentum trend channel alert here. There's a chance that it could actually push and accelerate back down. Not like the NASDAQ before. See how you had these situations here? You got your downtrend channel alert, but no follow through, market breakout. Same thing here, trend channel alert. Really no follow through, market breaks out. But this time that you got it, you got more selling pressure. Back here when you had it, you didn't get any follow through. This is a pointer here. This bar is not as deep inside the real body as I think it was on the Dow chart, but you still are inside the real body. Now you're at the top of the real body. You're up in here. If I can show, can I show it here? Okay. Yep. So here you are. You're about to enter into the real body of this bar here. You're not in it yet. You're getting close. Okay. Getting close. Getting real close. Just not in it yet. We'll see if it can hold. All right. So same rules apply as to the other charts. All right, so that's the E-mini S&P 500. Let's take a look now at Bitcoin futures. Bitcoin futures is doing absolutely nothing. You're getting rally and crash alerts all over the place, but really no real follow through. Got your rally alert here. Market came up a little bit, and then you got a crash alert that came back down. Then you got your rally alerts because it leveled out and it ran back up again. Then you got a crash alert. You got a little bit of sell off, but then it stopped, and you got another rally alert. The market rallied up a little bit for you. Then it looked like it was topping out. You got a crash alert. 2 in a row, back to back. The market did pull back a little bit. Then it leveled off. Now you got another rally alert here on the week of October the 4th. Yeah, that was on October the 4th because it's the daily chart. And the market tried to go a little bit, couldn't hold it. Now you got a crash alert, and then you just took out the prior bar's lows, and then recovered into the close. So the market it don't know, it's confused. It don't know what it want to do. It's trying to do something. All right, it's struggling. All right, you still got your uptrend channel intact, but you're bumping your head at the bottom of the Kumo cloud. You got bullish momentum picking up now. All right, about a week ago, you had the bearish momentum, but it didn't follow through. The week prior to that, you had bullish momentum with no follow through. The week prior to that, you had bearish momentum with no real follow through. And then the week before that, you had some bullish momentum, but no follow through. It has been going back and forth, bullish, bearish, bullish, bullish, bearish, bullish, bearish, bullish, bearish. It's just all over the place. It's a flat market. It's neither selling off nor rallying at the moment. But the current position of the market is a base for rally. Prior positioning was your ceiling put in for selling, no real follow through. Prior to that, you had your base put in for rally, and it did rally quite good, got you in the Kumo cloud, and then that crash alert came and just pushed you right back down again. So there's nothing to see here on the Bitcoin futures until it actually does something. Right now it's flat, total flat line. All right, looking at the US dollar, it should be noted that gold and silver are not just commodities, they're considered money as well. So you got precious metals, It's considered money, it's a currency, and it's a commodity all rolled in one. Silver has more industrial purpose use than gold does, but they're still currencies and they're still commodities at the same time. All right, they have multiple purposes. All right, so looking at your dollar, as long as this dollar stays in a bullish momentum phase, is going to put pressure on commodity prices. Back here, gold and silver had a chance to run and couldn't, because, and then this is back when the dollar was under negative momentum and selling off. And then prior to that, you had bullish momentum, but again, gold and silver couldn't really do anything. And then back here, you had two chances so far in the past several weeks for gold and silver to do a little something when the dollar was selling off, and they've done nothing. And now that the dollar is strengthening again, they're doing nothing. All right, so I don't know, man. It's right now, I have no rally alerts in here for this dollar. It's a controlled currency right now. All right, the Fed's not going to let the dollar drop too much, and the Trump White House needs the dollar, like I told you, to be at least above 90. Right now, though, this dollar is threatening to go back to par, which is 100. That's what it's looking like it wants to do. All right, so it is what it is, folks. That's all I can tell you. It is what it is. All right, so we take what we got and make it work from there. All right, so nothing to see here on this dollar except for strength, man. All right, right now you see it's trying to decide though what it wants to do. It's really trying to decide, is it really going to go bullish this time or not? All right, you got the bullish momentum that's been increasing, trend momentum, but you're not really rallying into new highs. You're kind of leveling off here, hence the time capsule right here at the bottom. See the hourglass? All right, it's bullish, but all right, only time will tell if it's going to continue this course or not. All right, so this is where we are. Okay, and this is a daily chart, and it should be noted that August the 15th of 2018, man, we was up here, flirting with 97. Not too far away from that 100, man, that par. So this is where we are right now. All right. Regardless of all the news and stuff out there in the media, look what the price is telling you. This puts pressure on your commodity prices and makes it very difficult for them to rally. It would take, a real severe story to get commodities to rally in the face of a strong dollar. It would have to be, drought or freeze warnings and other things of that nature in order to hit that. All right. All right, moving on. Is that it? Yep, that's it. Okay, so with that being said, remember, pulsewavetrading.com. So if you like to get these rally and crash alerts delivered to you ahead of market moves, so you know before it happens, before anyone else knows, you'll know not only when it's coming, but you'll know exactly how to take advantage of it as well. That's pulsewavetrading.com. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.